Thinking about buying a home in San Jose, before you do, there are certain types of homes in San Jose that you should definitely avoid. I'm gonna break down the types of homes in San Jose that could end up costing you a whole bunch of money. So before you do anything, please watch this video. Today I'm gonna break down 6 different types of homes that you should be aware of that should raise a flag in your head to really dig into further and possibly completely avoid. And each section, I'm gonna talk about why you might avoid them, what are common issues with that, what risks there are, and if possible, an alternative that you should consider. All right, so let's get started. House type number 1 is going to be a house with unpermitted additions. Well, why would you avoid that? First off, unpermitted additions means that there has not been a contractor that's been licensed and checked by the city inspector to verify things were all done to code. So, do you know that it was done to code? Do you know it was done with a licensed contractor? Who did the work? All these items raise red flags, making you wonder, was it done properly? And if it wasn't, what kind of costly mistakes were made or issues could there be? For example, if you're adding on an addition to a house, you're doing new foundation, new electrical, new plumbing, that is major stuff. We're in earthquake country. What if the foundation wasn't tied into the old foundation properly and all of a sudden in an earthquake, you have an issue? These are really big, huge, and costly items that could come up. So avoiding unpermitted additions is really key. I actually just ran into one a couple weeks ago with a buyer looking at a property in Cambrian. They loved it because it was pretty, it had all this extra space, but when I was looking at some of the disclosures, the square footage discrepancy form, which is required, did flag that the seller said there was like 300 square feet more than the actual county records. And when I dug into that, indeed, there were no permits for any of the work, yet there was this bigger space. That's a big deal because of all the risks that we just talked about with whether it was done properly or not. The other thing that you really need to consider is you may be thinking appraising or comping the house out based on the actual size, but when a bank comes in to look at value, they're looking at the county records. And if you've got a 300 square foot discrepancy, that is going to have a huge impact on the value the bank will put on the property versus what you might want to pay. So really be aware of what you're paying, appraisal values, and what future repairs might be coming out of that potential item, because these are all really big deal that could cost you lots of money. Alternative, of course, going for a property that has permitted additions, even if it's an older property and not quite as pretty on the surface, then you can do it right, or you can hire licensed contractors to do it and you know it's being done to code. Okay, house type number 2 is going to be a flip. Here in the San Jose area, we have a lot of home flippers. Well, I get 3 to 5 calls a day with somebody looking for inventory off market to buy to then flip. And these investors, number 1, are looking to make money. Of course, that's why they do it, right? So in order to do that, they typically find a home that's distressed or has extreme lack of maintenance, or maybe somebody has so much stuff and has been a hoarder they can't get out of the property. Those type of homeowners typically are going to have for sure deferred maintenance or hidden issues. And a flipper's job is to come in and make it look pretty so that a buyer is gonna wanna buy it. Now, not all flippers are doing this with permits, with licensed contractors, and doing it 100% right, because the flipper's motivation is to make money. So they might be looking to use the cheapest materials possible, make it look pretty on the inside, but not really deal with the hidden neglected maintenance items that were there from the previous owner. So there could be a lot of hidden problems, even though it looks brand new to you, that actually exist in the property. One way to know about this, to kind of put your eyes and make sure you're not getting duped by something like this, would be to look at cosmetic items. Now, I will say that there are really high quality, good flippers out there. So this doesn't apply to all flippers by any means. But one way you can tell is the finished cosmetic work. Are the seams on the counters done properly and do they look right? Did the tile used actually in the right application? I literally was in a property where they put huge 24 by 24 inch tiles that are meant for the floor on the backsplash. So it looks really weird because there was this random seam every 2 feet. You know, it's just cutting corners and doing things cheaply, which raises red flags. Where else did they do that, right? So there are just so many things that can come up with a house flipper. So keep your eyes open, make sure things are done properly. I also saw recently new cabinets put into a property. The handles were not installed all in the same location, so it looked uneven and wonky. And on top of that, there was a ring, like a circle around each hole that was drilled. Like they used a completely wrong tool to drill the holes and marked the cabinets in the process. To me, that would say not a licensed contractor or somebody who's used to installing cabinets doing this work. So where else did they do that kind of labor to get this work done, right? These are the concerns that you're gonna have for sure, and they could be a lot of hidden costs with that. Alternative, I would recommend that you buy a house that maybe isn't distressed, especially if you're a first-time home buyer, but maybe is dated. Maybe it's 15 to 20 years old, but it was done with quality materials and it's still in good shape. It just doesn't look exactly maybe how you want it to look. Now there you can put a little money into changing the cosmetics, painting cabinets, maybe changing some countertops, and you have a good quality home that you're not gonna have to worry about hidden issues popping up. Home type number 3 is homes in fire zones. Please beware of this. There has been a huge change in the last 18 months, 2 years in California. Really, even this last year, I've seen some things that have blown my mind. Home insurance prices for homes in near risk or high fire risk areas has tripled or even sometimes quadrupled in cost by month. Now, the current homeowner might not be feeling this. I'm starting to see some of those policies when they renew be reassessed, but the new home buyer is completely gonna feel this. Number one, there are a lot of home insurance agencies that have dropped out of the California market. There's a whole political reason why that's happening, but what that means is there is not as much natural competition to provide good rates. The other thing is there's been a lot of California fires recently that have put houses at risk, and so home insurance agencies are trying to make up those output of costs by charging higher fees for homes that have higher risk, which in a sense makes sense. But as a buyer, what you need to be aware of is it could completely blow your budget out of the water. When you talk to a lender, they're typically estimating about $200 a month in home insurance costs. But when you're looking in some of these areas that are near fire zones, like around trees in the Los Gatos Mountains or back against open space in Evergreen or Almaden, these areas, the home insurance could be $600, $700, $800 a month. And if you're paying a big mortgage payment and then that extra insurance, you might not qualify for that loan amount anymore and that home purchase price. So these are really big issues that completely void you being able to buy that property. And if you're still able to buy it, it's just really affecting your monthly budget, probably not where you want to spend money. So be aware of these risks and look into home insurance ahead of time. And the first thing you should be looking at is the NHD, or the Natural Hazard Disclosure, which is a required disclosure here in California to be provided by the seller up front. And it will flag whether it's in a fire zone or what they even call a wildfire zone. So those have different levels of tiering with the home insurance agencies that are going to cause different prices, but be aware that you should be shopping your home insurance before you're making an offer, and at a minimum have some contingency to make sure that you're getting home insurance in place and it's not blowing apart your budget. As an alternative, of course, you can budget these items in. You may really want to live in trees. Well, then you're going to need to offset your purchase price budget to accomplish the extra insurance costs as well. Plus, the county fire marshal likely has inspections to make sure you're compliant every year, and you're going to require to have that to get your home insurance. So those steps are going to cost you extra money every year, with trimming down bushes and grasses and making sure the trees are trimmed away from your property in a certain distance. It's a constant maintenance item that's going to add more costs. And of course, you can just look elsewhere in the city outside of fire zones and completely avoid all of this. All right, house type number 4 is going to be condos with high HOA fees or poor management. And there's a little extra piece in here that I'm going to get into with HOAs and condos that you should be aware of that's new. But first off, let's talk about HOAs. Basically, an HOA is a large company that's managing the property. So when you buy into a condominium or townhomes community with an HOA, they are maintaining the exterior of the property, including the roof, some cases the termite work, the landscaping work. Number one, inflation has caused all of those costs to go up. Therefore, many of the HOA fees are going up. Has the HOA adjusted for that going forward in the budget? Also, the costs for roofs have gone up and all this labor has gone up. Has the budget been adjusted and accommodated for in the monthly HOA? Now, how you would know that is there is a reserve study that is required by law to be provided from the HOA to the buyer to review. Now, you may not know how to read that, and every report is different in my experience, but you want to look for an HOA that is at least 70% funded. If it's less than that, we've got some concerns that we might need to be negotiating with the seller on to get some credit or to understand what special assessments or things are coming up. And I do have a recommendation of a party that I highly recommend. I think it's about $500 to get an HOA document inspection, and they're going to highlight and digest all of this material with their knowledge and provide it to you to let you know what kind of financial state the HOA is in and whether you should be expecting special assessments, if there's something written in minutes that's coming up. And they're just gonna really understand all that information and boil it down to you into some major points. The advantage to that is you can then, if there is an issue, go negotiate with the seller for a credit or somehow split the costs or somehow negotiate that to make it make sense. Or you can back out and avoid any of those potential issues. Now, one big special item that has come up recently is SB 326, which is about balconies in HOA communities. Long story short, some of these HOAs have not been maintaining balcony condition and safety up to the standard they should be, and there's been some lawsuits and now this new bill that is requiring HOAs to catch up on all of the safety of these balconies. And I've seen in many cases this could be a $40,000 special assessment per owner to get this addressed. Yeah, this is huge. It's a really, really big deal, and it's a lot of money, and you need to be aware of this and be negotiating with the seller if you are buying a property like this. So this is another item to be aware of, because HOA management and HOAs doing their budget properly is gonna affect you for the better or worse moving forward on the ownership of this particular property. So when you buy into an HOA, you think you're getting coverage on the roof and exterior, but you need to know for sure if they're financially prepared to care for those items and take care of it, or if you're gonna have some surprises down the road, right? So be aware, understand the HOA, don't just blow it off. It's really important to dig in and to go in with eyes wide open. Property type number 5 is going to be a home with extensive termites. Now, what does that mean? So in San Jose, there are a lot of termite issues. It is a pest you're just gonna have to get to know and deal with here in San Jose. San Jose used to be orchards, and there's a lot of tree roots in the soil, and there's a lot of termites around, and our houses are typically built with wood. So the termites are looking for wood to munch on, and they're gonna find your house eventually. So it is a constant maintenance item that every 3 to 5 years you need to have your home inspected and those termites treated so it doesn't get extensive. That being said, most of this area was built in the 50s, 60s, and 70s, and some owners have completely neglected termites, meaning the termites have eaten up a lot of the house. And what does that mean for the structural integrity of the property? What does that mean for maintenance of a lot of different items throughout the home? You may get a termite report that says, hey, this house has $12,000 worth of termite work, and you think, great, I'll just pay $12,000 and get it fixed. But many of those cases, when it's a larger number, there are hidden items, or you'll see the termite report actually says further inspection required, or when this item is removed, we will provide a further inspection report, because they could go remove a roof eave, for example, and find that that entire beam has been eaten out by termites and is no longer structurally strong, and therefore the entire piece has to be replaced. So that can be costly, and it can be invasive, and it could affect other areas of the home, like redoing your entire roof or redoing a huge section of your roof. So the costs can compound and snowball into a much bigger number than what you see on the report. So be aware. What I tell my clients is under $5,000 is pretty typical. Somebody who's been fairly on top of it, you probably need a fumigation, you need a little bit of wood replacement here and there. When you're getting well over that $5,000 number, you need to dig into that and understand and completely know what you're getting into, because that can easily roll from a $12,000 or $20,000 bid up to $30,000, $40,000. And that is a very different number than $10,000. What are some ways that you can be aware that a house with termites might be an issue? Well, the first is when you walk up to a property and you see the roof eaves or the fascia board on the roof or the siding, all the paint's peeling and the wood doesn't look good below, or the wood looks pitted, that is a huge sign that there is lack of maintenance and there are potential issues that could go much further than what your eye can see. So that's going to be a red flag to really study and to dig into that further, so that you don't go in expecting a certain amount of repair costs for that to just be blown completely out of the water, to have hidden items that need to be addressed. Okay, and house type number 6 that you should consider avoiding is going to be a house with foundation issues. Now, I will again caveat this that many homes here, again, built 60s, 70s, some of them in the 50s, these foundations are kind of old. If the house was built prior to 1950, you're in a different category, and you're gonna find those in downtown San Jose and Willow Glen, in some of the more country areas potentially. What happened in 1950 is they started to use mechanically mixed concrete and rebar in the foundation to make it much more structurally sound. Prior to that, there was no rebar. There could have even been bricks or stone used to make the foundation. In the Rose Garden, I've seen this. In College Park, I've seen this, where homes were built on different big blocks or brick kind of material, and there's no rebar supporting it. So as the soil moves and ages, that can buckle and the entire foundation can literally crumble. So this is a really big deal depending on where you're at on the scale. Now, I will say I did a video recently, I'll link it here in this video, where I talk about foundations and what repairs are and what to be aware of. Like a foundation horizontal crack could be very fixable and very surmountable if you budget for it properly, right? But there are certain things, like I talked about, older foundations that are lacking anchor bolts or lacking rebar, or foundations I've seen in a Burbank area near downtown, a delta in the foundation walls from one spot to another of like 3 inches. So that's a big deal, because now we have a leveling issue throughout the house. You can fix the foundation, but you have to re-level the house, and then you maybe have to adjust things inside the house to fit now that it's level. So it's just, again, a can of worms. So that is something that you should be aware of and understanding and potentially avoiding, because it can cost you a lot more money than you think. So if you're in the market for a home in San Jose and you want to avoid these costly mistakes, reach out to me. I would love to talk with you about your plans and talk to you about being your agent and what that entails and the service that I provide. Reach out at the number below or schedule a call in the link in the description, and I'd love to get started and talk with you. We have a lot of people reaching out, very thrilled to have a detailed breakdown of the home and a summary of the inspections to understand what they're getting into and to really have an overall picture of the costs to buy a home. I'm Theresa Wellman with Homeowner Experience Real Estate. Thank you for joining me.